All right, welcome into Business Express on a hump of the week Wednesday morning here on Smooth 98.1. Love music, love life. The Smooth Breakfast is in full flow on the 7th day of January 2026. It is 32 minutes past 6 a.m. Bright and beautiful Wednesday morning. Clear skies looking like it, 27 degrees Celsius out there, and it seems like it's going to be another warm day. But hey, warm day, clear skies. That's exactly what we need to get out and about to do what it is that we need to do. Ayokunmi here. And the show is brought to you by Into Switch. This morning, we'll be having an interesting conversation, taking a look at the economy. Well, the big question is, what does 2026 look like for the economy of Africa's most populous nation? Well, PAC Research have a new 2026 macroeconomic outlook, and there's a guest with me today to discuss a number of important topics that affect each and every single one of us. Joining me on Business Express this morning is Afamuefuna Chukwurah. He is the deputy head of research at PAC Research. Afam, good morning to you. Welcome into the show.
Good morning, Ayo. It's good to be here.
It's a pleasure to have you on Truth to talk about this very, very important issue. I mean, we're just starting the year, so it's good to have some sort of a blueprint or idea of what the economic outlook is going to look like for the rest of the year. And you can join us on the conversation. Send those messages in on WhatsApp. Keep up with us on YouTube as well. We're streaming live at Smooth 981 FM Lagos. Smooth 981 FM Lagos. You can also send WhatsApp messages on 0911 911 That is the WhatsApp number. All right, so let's begin this way. Cost of living. Now, that is the number one topic on the minds of many Nigerians out there. If we take a look at inflation, it moderated to about 14.5% in November. Now, what is your outlook for inflation in Nigeria come 2026?
Okay, thank you very much, Ayo. It's quite encouraging to observe the consistent downward trend in inflation so far in 2025, especially as you rightly mentioned, the print at 14.45% in November, which marks the eighth consecutive monthly decline in inflation. This tells us that inflation has likely peaked and is easing. So my base case outlook for inflation is it to continue to trend lower, although it's going to remain elevated, averaging about 12 to 13% through the year 2026. This is most likely going to be supported with sustained exchange rate stability, tighter monetary policies, and also the base effects as well. But notwithstanding, a caveat to our expectation to inflation includes our exposure to structural cost pressures, especially in the energy, transport, and logistics, also supply chain bottlenecks. And don't forget also that 2026 is the penultimate year to elections, so there will be increased government spending, which would justify inflation remaining sticky upwards.
Okay, I mean, looking at those reasons you gave, could there be any unseen shocks, to that outlook for the inflationary numbers?
Yes, beyond the caveat I just gave, unseen shocks could lie majorly around energy and food price shocks, particularly from geopolitics and climate-related disruptions. We've seen something like this around 2022, 2023, during the event of the Russia-Ukraine war, which had an adverse impact on energy prices and also food prices, which trickled majorly or fostered inflation in Africa. Nigeria then saw inflation spiral from 16% in 2021 to about 23% in 2023. So this tells us that controlling inflation is not linear. That's why the gradual gains we're seeing today is encouraging, but it still remains much fragile, and we need to be very careful in managing the gains and sustaining the gains we're seeing right now.
Definitely need to be very, very careful looking at the numbers and looking at the reality attached to the numbers as well. That is something that we'll be keeping a very keen eye on to watch and see how it all plays out. Now, let's talk about the Naira. You already alluded to the Naira. You talked about looking forward to exchange rate stability, continuing in 2026. But Why do you think that will be?
Majorly that would be hinged upon the rebuilding of policy credibility and sustained FX liquidity, which we've seen in 2025, and we expect that to continue in 2026. We are projecting that there will not be sharp directional movements, either appreciation or collapse of the naira, but rather it will continue its relative stability in 2026, insofar as the CBN sustains its policy reforms and drive towards ensuring this.
Okay, I mean, we are talking about stability right now, and this is just coming from, a deeper thought in my head. Is there any possibility, maybe somehow, of even the naira strengthening further against the dollar, not just stabilizing where it is right now?
Yes, most definitely. Like I alluded to earlier, this pattern we're seeing, tightening monetary policy, declining inflation, post-adjustment processes, which we've experienced in peer countries like Egypt and Ghana. So if we take a cue or draw a parallel between Nigeria and those countries, we should expect that if this sustained decline in inflation continues, we are definitely going to see some gains in the naira beyond what we are seeing right now, but it won't be abrupt. It will be tampered slowly, but it won't be abrupt appreciation, as you had asked.
Okay. I will come to monetary policy in a moment, but I still want to stick with FX. And one of the important things for the Nigerian economy, and that is the FX inflows. Can Nigeria keep attracting that in 2026? What do you think?
Yes, I'm positive we can keep attracting that. I mean, we have already started seeing some antecedents in 2025, and not just the headline numbers, but the composition of these FX matters. 2025, foreign portfolio investments and money market inflows for the first 10 months have already exceeded $20 billion. And we believe that this channel of FX inflow will continue to do the heavy lifting for
Right.
FX into 2026. We also look at our diaspora remittances, which in the first 10 months have exceeded $4.2 billion as well. This channel is going to be sustained most definitely because it's not cyclical. It's not tied to businesses, but sentinel to individuals doing that. But the FDIs are quite slow, although we are seeing tampered progress. In Q3, we just reported 720 million dollars inflow as against 150 million in Q1 2025. So majorly, we expect more inflows from the FPIs, but more progress or much appreciable progress will definitely come in terms of foreign direct investments.
Okay, now that is something that everybody actually wants to hear. Whew, relief. Okay, let's jump into the monetary policy. Do you think the benchmark rate could remain at 27% for much of the year, or do you see any cuts on the horizon? If I remember correctly, I think the last two MPCs, the rate was held. So, do you think there will be any cuts on the horizon, or will there be, a maintenance of that rate where it is right now?
Okay, so for like you rightly said, the September MPC came with a cut of 50 basis points, and since then we've held rates at 27%. So any further easing will definitely be cautious and sequenced and majorly data dependent. I will take a cue from countries like Brazil and Mexico that despite seeing gains in tighter monetary policy, they delayed easing so that they can anchor these positive gains in inflation and also make sure that the real rates that became positive were sustained. So for Nigeria, our inflation volatility and FX sensitivity are much higher. So we believe that the central bank's focus is going to be on credibility and price stability first. Then the sequencing will come with growth support later.
All right, so when you put all this together, look at things from a holistic point of view, what does all this mean for borrowing costs for businesses, and even for individuals as well.
Yeah, well, for borrowing costs, it's definitely going to remain higher in the near term.
Ah,
SMEs and households will feel the pressure most. But the good side is that savers and fixed income investors benefit from such. So it seems like a trade-off, although uncomfortable, but it's deliberate. One thing as well, we should always know that inflation and FX stability hurt small businesses exponentially than higher rates do. So for businesses, a little word of advice is for them to optimize operations, cost efficiency so that they can improve their margins and focus more on shorter term financing as we observe rates normalize in the near term.
alrighty. All right, good to hear that. Okay. As we wrap up the conversation this morning, I just want to get your, should I say, projection on economic growth. I mean, in 2025, it was about 3.98% or thereabouts, if my math is correct. But can economic growth actually hit about 4% or higher in 2026? I mean, are you bold enough to make that projection?
Yeah, it's quite possible. It's achievable, but not guaranteed, because it's hinged upon macroeconomic and FX stability, which are very much essential to this. Um, we can take a cue when we look at countries that have exponentially grown their GDP rate, like Vietnam and India. Looking at Nigeria, the domestic activities, our GDP is mostly domestic driven, and we can drive this majorly through stabilizing our oil production quota, which already we've been seeing gains. I think for the most part of H2 2025, we've averaged 1.6 million barrels per day above the OPEC quota of 1.5. And also, if we build on the momentum currently seen in the services sector, particularly in telecoms and fintech, it will provide a durable non-oil growth anchor. So it's very much possible, but it hinges upon policy discipline and sustenance for us to exceed 4%
Hmm.
in 2026.
All right, if all the right ingredients are in the pots, then why can't that 4% growth rates be hit or even higher than that? All right. Let me take a message from Tayo as we wrap up on the conversation this morning. Tayo is in Aja. Tayo, good morning to you. He says, I hope government can tame the rise of the dollar because Forex plays an important role in our economy, especially with 2027 elections instead of business in or on the horizon. Tayo, thank you very much for your message. It has been quite an interesting morning on the show Business Express, brought to you by IntoSwitch. I will say a very, very big thank you to my guest this morning in the person of Afamuefuna Chukwurah. He is the Deputy Head of Research at PAC Research. Afam, thank you so much for joining me this morning. It's been a pleasure.
Thank you, Ayo. Pleasure is all mine.
All right. Have a great Wednesday and a great rest of the week as well.
Yeah, same here. Bye.
All righty. Thank you, Lagos, for being a part of the show. This morning, it has been an interesting one, taking a look at the economic outlook for 2026. The outlook for the rest of the show is definitely exciting on the Smooth Breakfast here on Smooth 98.1. Ayokunmi, kick your here. Stay with us. Don't go anywhere.